Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of NIO, ticker symbol NIO, which closed on the day, Tuesday, February 13th, at a price of $5.70, being red, down more than 6% on the day. And the previous day, it actually looked like there was some strength, closing above $6 at a price of $6.08, being higher than the previous close that we saw above $6 on February 6th, and that was at a price of $6.03. But we did get this big wick up to the top here that may have been rejected from this Fibonacci level that I will go over in just 1 second. So really big picture, in last week's video, I did this retracement from the low here on December 1st at a price of $7.01, going up to the high here of December 28th. And from that, we did get this Fibonacci retracement or extension, the 1618 at a price of $5.43. We did get a dip below that at this convergence of that level and this white downtrending level that I went over also in last week's video. And so we did get a dip to a low of $5.30 on February 5th. And then following that, we created this gap at a price of going down to it to fill it would be at a price of $5.48, which was not only the high on that day, well, actually the close was a little bit lower at $5.38. So quite possible we could be going down to those levels, which also do coincide with this 1618 extension. But for this video, what I wanted to go over is this yellow retracement that I've already done, again from the high at a price of $9.57 hit on December 28th, coming down to the low of $5.30. So rather than focusing on all of the levels, I really just wanted to zoom in to look at the price action that's a little more relevant for what we're looking at in the coming days of trading before next week. And so what we can see from this is really, I do have this line marked from the white Fibonacci retracement, the 100% retracement. Actually, that's the low over here. That is right around $7 that I do have marked by this purple line. And that does seem to coincide with this yellow retracement, the 382 level at a price of $6.93. Also, we do have this gap to the upside that needs to be filled at a price of $7.16. So it seems like not only the psychological level of $7, but these three other technical levels are right around $7. So it does seem like that is a level we will be revisiting at some point, hopefully in the near future. But I do think that we need to test some other levels on our way up there. And it actually looks like on December 12th, so just yesterday on Monday, we did get rejected, it looks like, from the 236, which is at a price of $6.31. So the high yesterday was $6.28, so nearly getting to that level before we got rejected, but closing above $6 a share. That really just being a psychological level stands out to me as being a pretty important one to hold. But we did get rejected, now being at a price of $5.70. But really, I do feel like the market generally kind of sold off today. So I'm not really too surprised to see NIO down on the day. But I do think that, we could be looking at perhaps a retracement to fill this gap at $5.48 or getting back to this 1618 retracement at $5.43 or perhaps retesting the low here at $5.30. But one thing that I can do is do another Fibonacci retracement. So I can do this retracement from the low here at $5.30 going up to the high here at $6.28. And so from that retracement, we can get an idea of some levels that stand out. And so, moving up from the bottom, we can see that the 786 is right around $5.50 at $5.51. And that does seem to coincide with not only this gap fill, but also be right around this 1618 retracement. So perhaps we do find support at $5.51. However, it does look like the 618 at a price of $5.67 has served as potential support, as we did hit a low on the day today, Tuesday, February 13th, of $5.65, so piercing that level, but closing 3 cents above it. So that is potential support. And if we are able to hold that level, the next level up that we do want to be closing above is the 50% retracement at $5.79. Then moving up, ideally we bypass the 50% retracement and move to the 382 at a price of $5.90. But ideally we want to see closes above $6, get 2 consecutive closes above $6, and that could really confirm that as support. We were not able to get 2 consecutive closes above, although we did see 2 closes above, just with a few days in between. And really, ideally, what we want to see is closing above $6.05, which is the 236 retracement. And then so from there, we can really start to consider $7 as a possibility, but really we need to be seeing closes above this high at $6.28, or this 236 retracement from this yellow retracement here at a price of $6.31. So if we can start to see consecutive closes above those levels, then we could start to talk about $7 a share. Hopefully that's where price is at a week from now. But, we'll have to wait and see. And I do think it is pretty convincing that the 618 here at $5.67 is acting as support, or at least that's what I'm hoping. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.